Jai Hind student, today we are going to discuss the important question in the financial management. The first question, what do you mean by the financial management? The financial management is all about planning, organizing, directing, controlling the financial pursuits such as the acquisition and utilization of capital of the firm. To put in other words, it applying the general management standard to the financial resources of the firm. Next question, how does the production cycle impact the working capital? The production cycle impact the working capital as working capital requirement will be greater with the large production cycle. Next question, while performing the financial function, every manager take three decisions. Explain those decisions. The manager take three following decisions while performing the financial functions. The first, financing decision. This decision is about the choosing the cheapest sources from the amount of finance proposed from the various short and long term sources. Investment decisions, this is about the choosing the cheapest proposal for the all available alternative proposal why gets the highest possible return for the investor. And next, dividend decision, this decision is to choose the between whether the earning should be distributed to the stockholder as the dividend or to the retain the earning of the finance as the long term plan of the company. Next question, state the four factors which affect the working requirement of a company. The answer is the four factors that affect the working requirement of a company are as follows. First, nature of a business. The primary nature of business influence the amount of nature of business required by it. For instance, the organization involved in trading business require a small amount of working capital as compared to the bigger organization. Next, the scale of organization. A large organization require large inventory as the working capital than the small company. Next, business cycle. When there is a growth in the economy, the productions of a company increase, the more working capital is required as compared to when there is a crisis in the economy. And last, seasonal factor. In the winter seasons, demand will high, so the working capital increase as compared to the off season. Next question, the board of directors asked to design the capital structure of a company. What are the factors you would consider to be added? The factor included to the capital structure of a company are interest coverage ratio, cash flow situation, debt service coverage ratio, regulatory framework, return on investment, and tax rate. Next question, the management of organization decide to enlarge the business activities by growing the stock of raw material and finished product as estimated cost of rupees 40 lakh. Describe the various way open to organization to increase the money for the reason. The answer is that the organization can raise finance by the following reason: the issue of debentures, issue of stock, loan for the financial institution, banks, and return earning. Next question, what do you understand by the term financial management? What is the objective of financial management? The financial management is concerned with the optimal procurement as well as uses of finance. For optimal procurement, different available sources of finance are identified and compared in the terms of the cost and associated risks. The primary objective of financial management is to maximize the shareholder wealth, and this means maximization of the market value of equity shares. Increase in market value of shares depend on the financial decision taken by the firm. Market price of the share is the index of the capital invested. If the market price of the share increases, it can be said to the capital invested by shareholder are been appreciating. On the contrary, the fall in market price of the share has been adverse effect on their wealth. The other main objective of the financial management are ensuring the effective utilizations of fund and ensuring the safety of fund by creating the reserve and reinvestment of the profit. Next question, explain how does the proper financial management help the growth in of business. The sound financial management is key to the prosperity of business because of the following advantage. It helps obtaining the sufficient fund at minimum cost, ensure the effective utilization of fund. It tries to invest fund in various assets with view of maximizing the return on the shareholder investment, tries to generate the sufficient profit to finance expenses and modernization of other enterprises, securities and growth, and last, ensure the safety of fund through the creation of reserve and reinvestment of the profit.